Hi everyone. Today let's go over the economic calendar, then we'll go over the Fed futures, then we'll go over the charts, then we'll go over my results for the day and my positions going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the economic calendar here, you can see we had CPI come in today. So core CPI month over month did come in at 0.5 compared to the expectation at 0.4 and the previous month at 0.4. So just a little bit hotter than expected on the month over month basis. But then CPI year over year and core CPI year over year came in at expectations. So 0.6 and 5.5. So again, pretty good. Better than the previous iteration, the lowest level it's been in quite a while. So a little bit back on track compared to the numbers that we were seeing in January. If you look at the report a little closer, the services numbers were better. And that calmed down the marks early in the session. We'll go over the charts later, but basically we rallied into the early part of the session. And looking at the calendar for tomorrow, we have PPI, core, and year over year. We have PPI, regular and core, month over month and year over year. So this will be another indicator for inflation. We're expecting 0.4% on core for month over month. And then we're looking at 0.45 for the previous iteration on core for year over year. So we'd like to see something smaller than that and at least in line with month over month expectations. Looking at regular PPI, you can see last month was 0.7. We're expecting 0.3, so pretty big step down. That would be great. But obviously, this is going to be a big driver for the markets. And then looking at Thursday, we have jobless claims again, which have been a little bit hotter topic here recently. And then always good to look at, we have consumer sentiment here and the U.S. leading economic index. Moving over to Fed futures, these continue to adjust very quickly here. You can see about 70% looking for a 25 basis point hike. And then we have about 30% here looking for a pause in March. Again, that's a small step up from yesterday. You can see yesterday's probability was 23% for a pause versus 76%. So a pause moving slightly in the bullish direction as a result of that CPI data today. Definitely interesting. If we do get a pause, we might see a little bit of a rally in markets. That would be interesting. But then again, when we look at the main numbers, we're still just about split between a pause and 25 basis points, depending on what we get in March. And then you can see about 10% chance we get a pause in both months. So keep that in mind. This is again slightly higher than the previous day. We have 6% versus 10% here today. Pretty interesting. Again, saying that the markets like the CPI data and that it calmed down a little bit of fear about inflation going into the Fed meeting on 22 March. Moving over to the charts here, starting with the S&P 500 on the hourly and the daily chart, you can see basically continued the rally that we kind of started yesterday. So this ended up being a little bit of a basing formation, just like we talked about in yesterday's session. Came in, tested some of those levels here today, looking at the 9 and 21 EMA as well as VWAP on the hourly chart, ended up being a solid base to buy from. Sold at the 55 EMA here on the hourly chart, did get a retest of the 21 EMA on the hourly chart. Ended up being another solid buying opportunity into the close. Very, very strong close. About the last 30 minutes was basically straight up, pretty aggressive. Again, at that 55 EMA, which was resistance before, so we do have to watch that going into tomorrow's session. Volume on the last candle was super aggressive, so that indicates to me that we should get a continuation tomorrow. Looking at the volume profile here, you can see solid buying at this previous low, and then we moved through these areas fairly quickly. If we do break out above this trend line at the 92.42 level, which I talked about yesterday being resistance, which it ended up being, then we need to be looking at 394.80, and then we have the 144 EMA and 200 SMA sitting up here at 396.30 and 397.50 or so, which does correlate with high volume up here at 398.38. This could be a pretty aggressive day, honestly, just because of how strong of a push down this was. You can see how little volume was in this area. We could see a pretty aggressive push through that zone. Looking at the daily chart, however, you can see there was some decent volume going back to the previous price action looking at December and January. So certainly an area where you could see some resistance at about 395.25. But looking at the daily, you can see this looks like a pretty solid island reversal. We had the gap down, Gap up, really strong push. We're above the longer term trend line that we've been watching. This was the long term trend line from basically the entire 2022 downtrend. Broke above it, created a high, retested that level, overthrew it really strongly here. It does look like we're back above there. You have to assume that that's going to be support as you move back up into this 398.25 zone. Once again, being high volume here, even on the daily chart. Moving over to the NASDAQ on the 15-minute and the 1 hour. Just wanted to highlight how helpful these zones have been. You can see we tested that zone yesterday, broke down from there, indicating pretty decent selling zones. And then as we pushed through that pre-market, you can assume that we were going to push into the next zone, which we did. Ended up breaking down from there, coming back into the lower zone, finding support, and then continuing higher. So fairly predictable price action, actually. And then you can see this aggressive push into the close. The last 45 minutes were super aggressive. Went from all the way down at 293.50 all the way up to 297.70. So huge push in the end of day. Lots of volume here. You can see on the last candle of the day, super aggressive. Looking at the hourly chart, same thing, high volume, pretty strong throughout the day. Momentum is fading slightly on the hourly chart, but on the 15-minute, does look like we're going higher. If we do get above this zone, then we have to look at that 341 level that we talked about yesterday. We also have the major downtrend line up here at 299.85. So we do have to watch those levels. RSI not overbought yet. Does look like we're still trending up here on both charts. Does look good for a bullish day tomorrow, at least until we get to that 341 level. Moving over here to the Russell and the Dow here on the 4-hour chart. Similar to the SPY and the NASDAQ here, we did get a bullish day on both. You can see we threw wicks to that previous day, which ended up being a basing formation at the trend line on the Russell. And then we pushed right to that next trend line, just like we thought we might, here at 178.64. And then we sold off from there, threw another wick to the downside, and then finished up slightly at the end of day. Definitely not nearly as strong as the SPY and the NASDAQ here at the end of day on the Russell. Dow looking slightly stronger. You can see a bigger wick, but it is selling off here a little bit after hours. So a little bit more concerning there. In terms of momentum on both charts, MACD says we're going higher. RSI, both of them say we're going a little bit higher here. You have the SMA swooping underneath both of those RSI numbers, looking like we're going to move higher over the medium term. In terms of price targets here, we're still looking at the trend line down at 173.91 on the Russell to the downside. If we can get above this trend line, then you have to be looking at 182.73 as your next level. On the Dow, it's a little bit harder to read, but we have 319 as your low here now. And if we do break to the upside, then we're looking about 328 as our next upside, right at the 55 EMA here on the 4-hour chart. Moving over to Apple and Tesla here on the daily chart, we did get the candle break and continuation on Apple just like we thought we might. So we had the candle break, continuation down, retrace, candle break, continuation higher right at that trend line. So now for support, you're looking at 150.69. If we do come back down, retest that level, and then we're looking to retest the highs at around 156. That would be interesting on Apple. Momentum, bullish, RSI, bullish. Tesla looks very strong today, gapped up, rallied throughout the session, retesting the 9 EMA here on the daily chart, so that's a little bit concerning. We also filled the gap going back to 8 March. Certainly an area where you could get a reversal and come down and fill this gap from today down to 174.48. That would be interesting. And then you would expect to find some support and move back up to maybe 193.50 back at the trend line. You also have an area of higher volume at 195.20 and the VWAP sitting up there at 195.16. So looking for a retest in this zone, but certainly at an area where you could get a little bit of resistance in the short term. Moving over to Google and Amazon here, you can see Google made a higher low here, and we did rally back up to resistance. So we're testing resistance now. If that does break, then we should be looking for a move up to the 144 EMA, currently sitting at $98. We also have the major trend line up here sitting about 50 cents above that. So look for that break, look for a push to that next trend line. If this does act as resistance, then we're waiting to see if this trend line that we have created is going to hold. That would be around 91.78. So about a $3 down move, find support, and then maybe break through. That would be interesting. Momentum, bullish. RSI, bullish. Amazon, similar thesis. We actually broke through this downtrend line that had been holding us for quite a while. We're above that. We closed above it. Certainly could get a reversal just like we did here on 15 February, but it does look a little bit stronger, especially after we have this double bottom looking formation here. We have the gap higher through the trend line and then the continuation. It looks strong. I would be looking for about a $98 price target. That's the highs from this previous consolidation and the low from mid-February. That would also fill a lot of these gaps that we had on this most recent down move. Overall, both of these look pretty bullish going into tomorrow's session. Moving over to transports here on the 4-hour and the daily chart. This trend line continues to hold. We retested it very deeply, took out the wick from yesterday, and then closed above it once again here at the 221.29 level. I would like to see a stronger push up. We did get a push up on that first candle of the 4-hour chart, but then we engulfed that entire move and then threw a big wick to the downside. So we're still consolidating here. Did fill the gap, which was interesting, but really you would like to see this push up and start to confirm this move higher. Looking at the daily chart, still have bearish momentum, still bearish on RSI, but we did have another huge volume day, which is interesting. You can see we tested the lows here from mid-February as well, just briefly, and then got rejection. So you would like to see this rally up, hold in this zone around 229.50. That's what I would like to see. Certainly have resistance here at 224.95, 225 in this zone. So looking for a hold above 225 and then that 229 area. Once we get into that 229 area, probably 223 is where we're going to see this end, in my opinion. Low volume through here. Certainly could end at that 229 level, but I would expect 233 to be the high in the short term before we get at least a little bit of a retracement on transports. Moving over to staples versus discretionary on the daily chart. Discretionary taking off to the upside, posting a 1.7% day here. You can see not quite an island reversal here, but did move significantly higher on the gap up. Did not fill the gap, looked very strong on the day. Momentum did turn slightly less bearish here on discretionary. Same here on staples. Both of these look strong. The trend line down here continues to hold. Of course, we have a lot of EMAs and SMAs here to the upside, pointing in the downward direction. So we do have resistance here on staples. Does need to push through there if we are going to make some higher highs. But right now, trend line is continuing to hold. Discretionary looks fairly strong. And we might be moving into a little bit more of a risk-on play. In terms of price targets for discretionary, you have to be looking at this 146 level, the area of highest volume here on the daily chart. So looking at 143.50 and then 146 for your levels, and then we have the most recent low as your downside level sitting at 136. And similarly on staples, we still have that downtrend line at 70.85 and then that area of highest volume at $73. Moving over to AMD and NVDA, I want to highlight these here for semis today just because AMD went bananas. We had a low wick on Monday, the 13th, all the way down to about 78.75. Then we closed here today at just about $88, $87.50 or so. So about $10 of upside in just the last couple days here on AMD. Huge move, looks very bullish. Similarly here on NVIDIA, very strong here today. Testing resistance once again. This has been an area of strong resistance for a while. Does look like this momentum is running out here, and we need a little bit of a deeper pullback to get a continuation if it's going to happen. But right now, we continue to ride that upper trend line. In terms of levels, we're watching 229.89, this previous consolidation zone, and then watching this trend line to the upside for a push up to around 250 on NVIDIA. Moving over to yields, not much to add here. I just want to highlight that yields did find a little bit of a bottom at the 200 SMA on the daily charts. Continue to hold in this zone here on the 10-year. Similarly, on the 2-year, we're still in that same zone that we've been in for a long time, going back to September of 22. We are at resistance, so we could see maybe a little bit of a breakdown. That would be interesting on the 2-year. 10-year could go a little bit higher. Maybe we retest the 55 EMA and the 144 EMAs at basically 3.7, just a little bit higher than we are right now. Maybe we retest this trend line, but right now yields don't seem to be driving the markets the same way that they had been recently. Moving over to the dollar, not much to add. Small basing formation on the 4-hour chart continues to go sideways, holding this 103.55 level, just below the support level we were watching, which is right on top of the 55 EMA here on the daily chart. Continues to bounce off that level through a wick to the upside just slightly. Does still look kind of bearish. Momentum is bearish. RSI bearish on the daily chart. Almost oversold here on the 4-hour, but does look more bearish than bullish here on the dollar. Overall, we've been in this consolidation zone for pretty much 2-3 months at this point, going back to mid-December, and it doesn't seem like the dollar is really going to make a big move in either direction right now. Moving over to JNK, this one's a little bit tougher to read here. So we threw a wick to the downside on the 4-hour chart. Does look slightly bullish on momentum, definitely interesting. RSI looks slightly bullish as well. RSI on the daily chart does look like we're retesting the SMA, does look like it could move higher here. Momentum turning slightly bullish as well. Daily candle looks like a doji, tested the 9 EMA here on the daily chart and got rejection. Almost filled that gap. Looks like we came up just short and then closed as a candle of indecision. You have to remember, this is an indecision candle and it could certainly go in either direction. The 4-hour looks slightly more bullish. If we could get above this 91 level tomorrow, back above this trend line, multiple trend lines in this zone, if we could get above those levels, that would make me feel a lot better about being more bullish tomorrow and going into the future here. This rally that we had from the end of December through mid-January looked very bullish and it did support the rally here. But this structure that we've had pretty much since 2 February has been very bearish and we do have to keep this in mind. Although this looks like a basing formation here, we got wick rejections after taking out the 21 February lows. You do have to keep in mind that this could absolutely continue to break down here tomorrow. And if that does happen, then we need to flip more bearish going into the rest of the week. Moving over to TLT here on the 4-hour chart and the daily, we ended up getting an island reversal. Huge island, huge volume. Everything about this has been pretty hard to look at. We kind of assumed that this was a basing formation and that we were going to get a move higher. Certainly didn't think it was going to be like this, where you had a huge gap, big day, huge gap, sell off. So that's interesting. Hard to trade for sure. Does look like we're finding support here at the 55 and 144 day moving averages. Certainly an area where we could see a little bit of a push higher. Looks like we were kind of overbought here. You can see huge wick reversal here on the 4-hour chart before we had that move lower. 21 EMA acting as support here on the 4-hour chart. If this is going to move higher, I would be looking for probably 105.50 as your next upper level. And then we have that area of highest volume, which does correlate with the area of highest volume here on the daily chart. If we do zoom in here, you can see highest volume is in this consolidation area, as you would expect. And then most recently, highest volume is sitting at 106.75. So keep an eye on those levels. 105.50, if that breaks, looking at 106.80, 107. And then to the low side, you have this previous consolidation, somewhere between 101 and 102. Finishing up here with the VIX on the 12-hour and the daily chart, you can see momentum here is to the downside. We threw big wicks through the trend lines and got rejection here today. We did find a little bit of support at the 2250 level like we thought that we might. We'll see if this breaks down here tomorrow, looking at 2164 is the next level. So pretty tight levels here. We do break down from there, then we're looking at 2065 back in this previous consolidation zone. That would be pretty interesting. I do expect to find some support at some point down here around 2050 or 21. That would be interesting. Right now, momentum is to the downside. Looking at RSI on the 12-hour, certainly at a point where you could see a little bit of a bounce. But with this negative momentum on both charts, I would expect that that's going to break through and continue lower here over the next day or two. In terms of results, I finally had a pretty good day, up about $1,200. You love to see it. Did really well trading in my IRA account. Definitely much better than yesterday. So I did take some profits early in the session when the IWM was looking like it was going to turn around. Obviously, it did turn around and I was able to re-enter at a lower price at 174 for 88 cents here. That's in a small profit already, so you love to see it. Looking at that daily P&L on the IRA at 445. Definitely have a little bit of work to do after the mistakes that I made yesterday, but overall looks good going into tomorrow's session. Individual account traded really well in and out of shares and options here. I did end up holding some 294 puts for 99 cents. Those are already in a $54 profit, so not super bullish going into tomorrow's session. With the rally that we had at end of day, I do think we might see a little bit of a pullback just because of how aggressive it was. It does certainly mean that we could go higher tomorrow, and that's something that I can trade in the short term. I might look to roll up these 294 puts if it does look strong, but overall, right now, still looking bullish into tomorrow's session. Let me know down in the comment section what you think of the CPI data or what we're going to get for PPI. And does anybody care about those failing banks anymore? Or are we all good? Is everything good going into the end of the week and looking forward to the FOMC next week? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.